Hey everyone, and welcome back for another deep dive. This time, we're going to be looking at some recent economic news
hmm
and how this might
Okay.
affect you if you're interested or thinking about the Toronto real estate market.
Oh.
The big news that kind of sparked all this
hmm
is that the Bank of Canada just announced a pretty significant interest rate cut,
Yeah.
and it's actually the second one
Right.
in a row.
Right.
And they even had like a whole news conference and everything.
Yeah, yeah.
So we've got some news articles, we've got some economic reports, we've even got snippets from the Bank of Canada governor himself to try to
Yeah.
help unpack all this.
Cool. Yeah. It's definitely interesting to see what's happening. You know what's interesting is that the Bank of Canada isn't just trying to make borrowing cheaper. It seems like they're trying to give the economy a bit of a jump start. They're basically saying that economic growth has been slower than they'd hoped. Unemployment is up, and they really want to keep inflation right on target at that 2%.
Okay, so it's not just about houses then, it's like
Yeah.
the whole economic engine. But let's be honest, a lot of us are wondering, what does this mean for buying or selling in Toronto? So lower interest rates mean cheaper mortgages,
Yeah.
right?
Yeah.
So does that mean we're about to see like Toronto housing prices just go through the roof?
Well, it's certainly a possibility. One analyst that we came across is predicting that this rate cut could lead to like a 15% increase in bidding wars,
Wow.
especially for those starter homes, because cheaper borrowing definitely makes it easier for people to kind of jump into the market, which in turn could push prices up. But here's the thing. The Bank of Canada is signaling that they might be more cautious about future cuts.
So this might be a limited time offer
Yeah.
for buyers, kind of like a flash sale on a condo?
Yeah, that's a great analogy. But we also have to consider what's happening with the Canadian dollar. It's been weakening. And some experts are even predicting that it could drop below 70 cents US.
I've heard whispers about that.
Mhm.
Doesn't that make things more expensive for us Canadians, though? Like if we want to buy
well,
imported avocados or
yeah,
something?
exactly. A weaker Canadian dollar is good news for exporters, but not so much for importers. Their costs go up. And then that often gets passed along to consumers.
Right?
And one expert we read actually pointed out that the U.S. Federal Reserve's actions could put even more pressure on the Canadian dollar.
So it's like we're in this economic dance with the U.S., and they're leading.
That's a great way to put it. It's a complex relationship, and it definitely influences what happens here in Canada.
Yeah, so we've got cheaper borrowing, potentially pushing prices up,
Right.
but a weaker dollar might
Right.
also make things more expensive overall. Plus, this whole dance with the U.S. economy, that we have to factor in. Is there anything else
Yeah.
on the radar that could
Yeah.
impact the Toronto housing market?
There are actually a couple other significant factors at play. One is the government's decision to reduce immigration targets. And this could have a ripple effect on the entire economy, including the demand for housing. Fewer people coming in means less competition for those Toronto properties. So think about it. Fewer people looking for those coveted downtown condos could actually ease some of the pressure.
On prices.
Exactly. So maybe the immigration changes could actually balance out some of that heat,
Yeah.
generated by the rate cut.
Yeah, it's definitely something to watch. And then, of course, we have the government trying to stimulate the economy.
Mm-hmm.
But things like, that temporary GST break
Yeah.
and those one-time payments they sent out.
Right. Those were supposed to help people cope with those rising costs.
Exactly. Yeah, the idea is that by putting more money in people's pockets,
Yeah.
they'll spend more, which boosts economic activity. But here's the interesting connection to real estate. That extra spending power could actually translate into more demand for housing as well. So it's like a chain reaction. More spending leads to more confidence, which could make people more likely to make a big purchase like a house.
That's a great way to think about it. But on the flip side, we can't ignore the potential impact of those tariffs the U.S. has been threatening.
Right, those have been looming over our heads for a while now.
Exactly. If those tariffs actually do come into effect, it could create a lot of uncertainty for Canadian businesses. And that uncertainty can trickle down to the housing market, making people a little more hesitant to invest in real estate.
It sounds like there's a lot of push and pull going on here.
Yeah.
So much to consider if you're thinking about buying or selling.
Absolutely. It's a very complex landscape with multiple forces at play. The rate cut might seem like a clear signal to jump into the market, but it's really important to weigh that against all these other factors we've been talking about.
So if someone came to you right now and said, should I buy a house in Toronto? What would you tell them?
I would tell them to take a deep breath and ask themselves, what's my personal strategy? You know the rate cut presents a potential opportunity, but it's just one piece of a much larger puzzle.
So it's not a simple yes or no answer.
Exactly. It's about understanding the bigger picture and really aligning your decisions with your own individual goals
Oh, wow.
and risk tolerance.
Man.
And remember, the Toronto real estate market is known for its dynamism. Prices can fluctuate, and what seems like a sure bet today might not be so certain tomorrow.
It's not just about chasing the lowest mortgage rate. It's about like understanding how all these pieces fit together.
Yeah, it's like trying to solve a multidimensional puzzle. You have to consider not only the current market conditions, but also how these larger economic forces might play out in the future.
That sounds a little daunting, honestly. Is there anything our listeners can do to make this whole process a little less overwhelming?
Absolutely. One of the best things you can do is stay informed. Keep an eye on the news, read economic reports, talk to experts.
Yeah. So it's about being proactive and not just reacting to whatever the market throws at us.
Exactly. Knowledge is power, especially when you're making a significant financial decision, like buying or selling a property. And remember, you don't have to go it alone. There are real estate agents, financial advisors, other professionals who can provide valuable guidance and support.
So as we wrap up this deep dive into the Toronto real estate market, what's the one piece of advice you'd leave our listeners with?
I would say approach this market with a sense of informed curiosity. Don't be afraid to ask questions. Do your research and think critically about the information you're receiving.
It's like being a detective, gathering all the clues
That's a great way to put it.
before you make your big move.
The more you understand about the market and the forces shaping it, the better equipped you'll be to navigate the complexities and make a decision that aligns with your goals.
Well, Thea, that's a great note to end on. Thanks for taking us on this deep dive into the Toronto real estate scene.
My pleasure. It's always great to explore these complex issues and help people make sense of it all.
And for our listeners, we'll be back soon with more deep dives into other fascinating topics. Until then, stay curious and keep exploring.